Traders, traders, good morning, good afternoon, good evening, wherever you are. Wherever you are in the world today, welcome. Welcome to another masterclass backed by popular demand, guys. These master classes of mine really, really get traders excited. I get requests on a daily basis to basically stream or basically produce master classes after master classes after master classes. And if obviously I did that, they would not be actually master classes. So I do these very thorough deep dives into trading the markets professionally several times a year. This is likely going to be my last master class of the year 2022. But buckle your seatbelts, get yourselves nice and comfortable, grab something to take notes with. These are sessions that you definitely want to take notes with. And these are sessions that you definitely want to repeat a variety of times. Repetition has a huge value. So sit back, relax, grab something to take notes with. This is going to be a big, big win for you. Now, what I've decided to do is actually with this master class is to delve into something that I have delved into in the past. But every now and then these things need to be repeated. As I've mentioned, repetition has a huge value when it comes to this. Traders, we learned that we retain less than 60% of what we take in the first time. It is only after about 3 or 4 repetitive repeats, if you will, that you get closer to that 90% retention. So you definitely want to use the law of repetition to really make things sink in. And there's also something interesting about repetition, traders. It's every single time you repeat after a certain amount of experience with the material, you repeat the material from a different state of experience, from a higher state of being, if you will. That higher state of experience, that higher state of being really allows you to take in more of the same information, but it hits differently. And so you can't be the same after an experience. You can't be the same after you've become more experienced in a thing. And so if you repeat in this form where we do this master class, you go out into the world, you utilize what you have retained from that master class. Then you come back after a certain period of experience and repeat the material again. You're repeating from a higher state of experience. That higher state will basically make the information come alive more, and basically you absorb more from the higher state. Remember, you are the collective result of your experiences. And the name of the game when it comes to trading is to build the right experience. My team and I, we spend a great deal of time every single day making sure that we put some form of content out on this channel that's specifically designed to do just that, to help you raise your level of market sophistication, to help you gain enough knowledge to go out into the markets and build the right experience. Because there are millions upon millions of people trying to do this by themselves and alone. That makes the game a lot more harder than it has to be. And there are millions of people who are actually building the wrong experience, which means that they're actually going backwards. And so many traders have to at some point catch back up from going backwards for so long to get themselves back to square one before they can start building their future in this activity we call trading. And that is an experience, or that is a path I do not want you to take. So it's all about gaining the right knowledge to start off accumulating the right experience. And the last thing I will say before we delve into the material today is this: you cannot be successful before you become experienced. Your success is on the other side of experience. And this is something that somehow, when it comes to trading, the vast majority of people forget. Somehow, when it comes to trading, people think that they can become successful right away before they become experienced. People think that they can get lucky. People think that they can take a course over a weekend and somehow Monday morning be a better trader. Life doesn't work this way. You do not become an elite athlete over a weekend. You do not become a top tier heart surgeon over a weekend or over a month or over a quarter or even over a year. Experience is necessary first. If you gain any degree of success before you become thoroughly experienced, that is not success. That is absolutely mathematical luck. It's numerical luck. All right. I don't want you to be lucky. I want you to be good. I don't want you to be lucky. I want you to be skilled. And the session that I have for you today is going to be designed specifically to help you gain the right experience from this day forward. If you do or take the steps that I'm going to outline for you today, you can be guaranteed that you're building the right experience. And if you keep going, your experience will ultimately reach that proverbial tipping point where there will be no going back. That's the tipping point that I need you to get to. My role is in your life is to get you to that tipping point. Many people consider me their mentor, but you have to understand what my role as your mentor is. I am your trader for life, but I'm not your mentor for life. I'm constantly telling you I want to be your trader for life, but I can't be, nor should I be, your mentor for life. I am your mentor up until the point that your real mentor takes over. I am the leader. I am the initial mentor that takes you to your ultimate mentor. Your ultimate mentor is your experience. Your experience is in a baby state right now, but the goal is to build that experience up to a point where it reaches a level where it can begin to take care of you for the rest of your life. All elite athletes are elite because there is nothing they haven't seen before, nothing that they don't know how to handle. There's no hardship or game scenario or situation that they haven't seen thousands upon thousands of times. That's what makes them elite, and that's what's going to make you elite in this game. Knowing how to build the right experience is the first key, and the 10 steps that I'm going to outline for you today is specifically designed to ensure that you're out there in the markets every day building your experience the right way. All right? So without any further ado, let's actually get started, okay? Fantastic. Loving this, guys. Whoo, we're back at it again. Loving it, loving it, loving it. All right, let's do this. Let us do this. Okay. Where is my mouse here? Where are you? All right. Boom. Okay, as many of you know, guys, my name is Oliver Velez, and I am presenting for you today the steps every day trader must know to ultimately become profitable. Guys, these steps won't make you profitable right away. It takes time, as I mentioned, to utilize these steps to build the right experience so that that right experience brings you ultimately to what I call the land of profitability. But it starts with these 10 steps, okay? Now, for those of you who have no idea who I am, guys, very quickly, I am the founder of IFundTraders.com. I have been in this space, this trading space, for a long time. Many people consider me to be the OG, guys. One of the original goats of the industry. I placed my first trade in 1981, became a professional trader in December of 1986, had an illustrious career on Wall Street before I set up my own institutional firm in September of 1994. I was one of the most known major influences in the trading space throughout the late 80s all the way into the 1990s. As a result of that, I was chosen to be the industry's first inaugural keynote speaker at their first international expo. I have trained literally tens of thousands of traders worldwide over my career that spans a 30+ year training career. I started off training traders on Wall Street professional institutional style traders. And moving into the 2000s, I began to focus more on bringing professional Wall Street trading to Main Street. And that is when I began trading regular individuals like you and me. I am a international best-selling author of 5 books that are written in 5 different languages. I fund over 5,000 traders worldwide today, and I continue to be one of the most sought-after international speakers on the topic of trading the markets professionally. I have been the subject of many financial periodicals across my career, guys. I've had physical offices throughout the world, including Germany, including Japan, including China, including Venezuela, and throughout the United States, Canada, you name it. Before the internet was a thing, you had to have physical trading offices, and I had physical trading offices spread all over the world, out of which my traders traded with me and for me. All right. These are some snapshots from my past, guys, at various speaking events. And this is a quick snapshot of some of the books. These books are written in 5 different languages: English, Spanish. All right. The books are also written in Mandarin. All right. And in German. If you want to follow me for daily content, not just video daily content, but other more active content, you can follow me on Twitter, where I'm largely Bitcoin focused. You can follow me on Instagram and Facebook, where I give you a little deeper insight into my daily life. Okay. Now, let's begin, guys. Let's begin. Step 1. Remember, I need you to take notes here, but I also need you to come back and repeat this. So step 1, the first thing you have to do is do what the vast majority of traders out there sloshing around, ruining their families' lives. The first thing I want you to do is you need to set a maximum loss per day for yourself. Guys, believe it or not, this basic thing will actually catapult you outside of the majority of traders and into the minority group that creates a line in the sand that they vowed to themselves that they will never break or go beyond. You'd be surprised how many people do not do this basic thing. That is why their losses are not consistent. Their losses are all over the place. They trade like it's a casino. And when most people say that day trading is gambling, they're actually not wrong, traders. They're actually right. Most people out there that dog the profession of trading, their comments are actually right. Those people that have no faith in actively trading the markets, in most cases, they are right. When most people say, day trading is gambling, that statement is right for the vast majority of people. The point is that I don't want it to be right for you. And the first thing that you must do is to stop the possibility of gambling. And the only way you can do that is with one step. It's very simple. One step takes you out of the casino. One step removes you from the majority of traders that are treating this like a gambling activity. You become a professional the moment you do this, traders. The moment you set a maximum loss per day. Now, this is what I do with my traders, guys. Every single one of my traders, and I have a total of over 14,000 traders worldwide in various states of training. I have traders that start off in my training program with $50,000 of buying power. Look at the top line, training $50,000. Their accounts are programmed to give them the ability for a maximum of 500 share positions in the stock market. So the system does not allow them to play stocks of more than 5,000. They can play 100 shares, 200 shares, but not more than 500 shares. So their maximum exposure in a single position is 500 shares. Look at the third column where it's programmed in their account that they cannot violate a 200 maximum daily loss. This ensures that from day one, my traders that enter my training program are not gamblers. This third column right there ensures that they are already in the minority group before they even start their training process because they're not allowed to go beyond $200. What this one simple but very powerful thing will do is to keep your maximum losses consistent. Your maximum loss will be $200 or less every single day of your life. And if you can do something every single day of your life, that's where discipline comes. That's where professional trading comes. This game is about controlling your losses more than it is about making money in the markets. You grow your profitability by growing your ability to lose the proper way. Everyone is focused on the wrong side. Everyone's focused on the wrong part of the equation. They think their number one job is to make money. No, the market's job is to make money. Your job is to do this: maximum loss every single day of no more than 200. Some days it's 100. Some days it's $60. Some days it's $10. Some days it's $180. But never, never in your life will you allow your account to go down by $200. But guess what happens when you do something this simple? Guess what happens when you make sure loss can never, ever take you beyond $200 in any given day? Guess what happens? You start to automatically have $300 days, $100 days, $500 days, $600 days, $300 days, $150 days, $80 days. But every single day will never be more than 200. Just by statistical math, you're going to have some days that are way more than $200. Just by throwing darts at a board, you'll pick plays that go way beyond $200. But your path toward professionalism, your path starts here, guys. Your path starts with this first step: making sure you systematize your maximum. It's number one because it's the first act of professionalism. And the vast majority of people out there are not doing this. That is why the vast majority of people are losers. All right, let's go. Step one: maximum loss of $200. I would start there. Now, that doesn't mean, traders, listen to me carefully, that doesn't mean that you should be losing $200 every single day. Look at the word that is the most important word in this step one: maximum. In fact, you should rarely lose $200 in a day. It's maximum 200. It doesn't mean that you wait for you to be down 200 and then get out of everything. No, you have a maximum loss of 200, which means that the majority of your losing days are way less than 200. Maximum is maximum for a reason. It doesn't happen very often. It's your max, the ultimate. But you don't make the ultimate in every losing day experience. Otherwise, it would be called the normal daily loss. No, it's not the normal daily loss. It's the maximum daily loss. So make sure that your days are mostly, your losing days are mostly less than 200, but never, ever more than 200, ever, as a max. All right? Now, let's move on. Step number two: write these down, guys. Write these points down. Write these notes down. Write these bullet points down. Step number two: set a maximum loss per trade. Now, there's a distinct difference between a maximum loss per day and a maximum loss per trade. If you have a maximum loss per day of 200, then your maximum loss per trade should not be 200. That is stupid. I don't want you using the whole day's allotment to one trade. This is another form of gambling. You're going to take your whole $200 loss allotment and bet it on red 13 or black 7. No, this is not professional. This is once again another form of gambling. You're going to make your maximum loss per trade smaller, much smaller than your maximum loss per day. Here's what you're going to do. You're going to take that $200 maximum loss per trade and you're going to divide it by 3. 3 is the minimum. You're going to divide it by 3. Some of you can go as far as dividing it by 4 if you want to tighten those losses just a little bit more. I would not go beyond 4 though, but I would not start off with less than 3 either. So it's 3 or 4, your choice. In this example, I've used 3. You're going to take $200, your max, whatever your max is. Maybe your max is not 200. Maybe you can't afford to lose $200 on your losing days. Maybe your max is $100. It doesn't matter. I'm using what my traders in my training program start off with. They start off with a $200 max loss per day. In my program, I encourage that they divide that by 3 or 4. That's their choice. The example I'm showing you here is to divide by 3, which brings you down to about $66, $67 per trade. You are not to lose more than $66 on any given trade. And let me tell you this, traders, I don't want to see you, right, waiting until you've got a loss of $60, then $62, then $64, then $66, and then you kill the trade. No, that is being a novice. You kill the trade before this is $66 in negative territory. When this is $62, get out. When it's $63, get out. Don't give yourself an actual chance of going even 1 penny beyond this, because this is what builds character in your trading. This is what builds discipline. When you say 66, that's not 66 and 5 cents. That's not $66 and 2 cents. That is before $66. And when it's maximum 200 a day, it's not $201. It's before $200. It's before $66. Don't let a single trade take your day away. Do you understand this, traders? When you start letting single trades take a chunk of your power away from you, you are not a professional. You are a novice. You are not the trader. The stock is trading you. You are not the trader. The market is playing you. We need to be the player of the market. We need to trade the stocks, and we need to hire stocks to do us one thing. Remember, I explained to you that your job is not to make money. It is the stock's job to make money. This is a partnership. It is your job to do this. To tell the stock, you've got $66 on the downside. That is your leeway. That is the rope that I'm giving you. All right. If you even hint at violating this rope, if you even hint at failing at your job to make me money, I will fire you. I will eliminate you before you see this number, before 66. Now go out there and do your job. Trading is a partnership between you and the market. Listen, traders, if I've said this once, I've said it 1,000 times. The market can't stop itself, so it needs you to stop it. $66. The market cannot end the game. It has no brakes. It has no stop button. It has no halt button. It has no turn off switch. You have the turn off switch. You have the stop button. You have the halt button. So the market's job is to go up after you've bought the stock. But your job is to stop the game. Your job is to halt the game. Your job is to fire the stock. Your job is to hit the kill switch, because that's what the market can't do. You can't make Microsoft go up $2. You're not that rich, buddy. You and all of your family can't make Microsoft go up $2. That takes billions of dollars to do that. So you can't make the stock move up and down, but the stock can move up and down. So the stock has its capability, its ability, but the stock can't stop the game. And then you can stop the game. So when you bring these two functions together, everyone should know what their job is. The problem many people out there have is that they're getting their jobs mixed up. They think their job is to find money in the markets. Wrong. They think their job is to find profitability in the markets. Wrong. Profits come to you. You don't find them. They come to you. Profits fall in your lap. Profits present themselves to you. No, you're supposed to just cut. You're supposed to be the freaking executioner. Do you understand? You're supposed to be a master executioner. And if you're a master executioner, trust me, just by chance, Just by a flip of the coin, you're going to find plays that make $100 and your maximum loss per trade is $66. You're going to find trades that make $200, $600, $500, $80, $150 just by math with absolutely no skill at picking stocks. You're going to find plays that win as long as you cut before $60. Cut. Math will take care of you. Probability will take care of you. You can, with these two steps right here, dramatically improve your results without a single ability to pick a stock well. Math will take care of you when you protect the downside the way these two first steps force you to do. Remember, traders, you lose your way to success at this game. And remember this, your future wins are always with you right now. I don't even care if you're a chronic loser. Your future wins are with you right now. You know where they are? They are locked inside of your current losses. All we have to do is make sure we're keeping them relatively small. $66 does that. Keep them relatively small. And every time we have a collection of losses, we crack them open to find out why. But your future wins are inside of these 66 or less dollar losses. We crack them open to find our future wins. Our future wins are always with us. They're inside of these $66 losses. It's powerful. But I first got to have you, I got to first get you to have $66 losses. How wonderful would it be to be able to legitimately, honestly say, I never lose more than $66? Do you know how professional that is? Do you know how precise that is? Do you know how amazing that is? I never lose more than $66. The market can never take more than $66 from me. The market can't hurt me. The market can't damage me. The market can't make me depressed. Why? Because I never allow it to take more than $66 from me. How many people in the world can really legitimately say that? It's powerful. I could stop the thing right here and you guys would explode in your trading if you just applied step 1 and step 2. You would explode. You don't even have to know how to pick stocks. You just throw a dart. Make a list of stocks and just throw a dart, or just say, eeny, meeny, miny, mo, boom. You say, I'm going to buy that one. And then you got $66. If it drops 62, $3, boom, cut. All right, do it. Yeah, eeny, meeny, miny, mo, boom. Okay, I'm going to buy that one, boom. All right, this one goes up $80. The next one goes up $200. All right, great. If you just cut 66, math is going to take care of the rest. It's impossible not to get a $100 win, a $200 win, a $150 win every now and then. And you just keep cutting at 66 or before 66. This is without any stock picking skill, which we're going to get to next. All right, let's go. Step number 3. Choose the right price range. Oh my God, traders. Oh my God. If we just add step number 3, remember I told you, you're going to actually explode your trading with no stock picking skill with just item 1 and 2. But my God, if you add 3 and get the right price range into your world, the right price range will actually take care of you, start taking care of you more than just 1 and 2 together. Adding 3, now the right price range starts adding to the probability of your success. So many people apply a maximum loss per day and a maximum loss per trade, but then they take that structure to the wrong price range. And it blows their numbers out of the water. We have to know where to go. So let's choose the right price range. Now, remember, I need you taking notes on this. This is a tiny bit involved here. All right? Boom. The right price. What we're going to do, I am predominantly an equity trader, guys, so I'm going to use the equity market as the basis here. And the vast majority of my traders are equity traders, although I have a huge group of Forex traders and a group of cryptocurrency traders as well. but by and large, my traders are largely equity traders. So I'm going to speak from the equity or the stock trading perspective right now. Okay. So here, look, I want you to look at I want you to look that I've divided price into three broad categories. The biggest category is in the middle here, right? Where the biggest category is in the middle here, where we have the $50 to $100 price range. Above, we have the category above, shoot, that's wrong. I hate this. This should be 100, guys. I'm so sorry. This should be 100. Let me make that correction here. This should be above 100. All right, let's do it like that. So you've got above $100. You've got the middle range, 50 to 100, and you have below $50. All right, so there's a group below $50 and a group above $100 and everything in between. Now, if you look at the structure I have here, is that you should have 20% of the stocks that you trade are above $100. 20% of the stocks you trade should be below $50, and 60% of the stocks you trade should be in the middle. The bulk of your trading list should be in between $50 and $100. Now, the reason why I want you to have price diversification, look at the number one on the left-hand side of the slide. I want you to have price diversification because there are price ranges where you can afford to go all the way up to your maximum share size. Remember, my traders have a maximum share size, right, of 500 shares. Now, they might not be able to do that with the higher price stocks, but they can certainly go there with the lower price stocks. All right? And so I need price diversification to give you the ability to sometimes trade with 2 lots, to sometimes trade with 3 lots, to sometimes trade with 5 lots. All right. I also want you to have a variety of beta ranges. So we're looking for alpha to a certain extent. Alpha means volatility, movement, velocity, momentum, stocks that have the ability to run far and fast. I don't want a boring stock that's almost like watching grass grow. Do you know how boring watching grass grow is? I don't care if a stock's moved up $2, but it moved up $2 over 2 months. That's like watching grass grow versus a stock that's moved up $2 over the past 8 minutes. That's alpha. We want alpha. So you're going to have higher alpha in the upper ranges, and you're going to have lower alpha in the low ranges. But there are times when you want to have lower alpha. It might be a market environment that's so freaking wild and uncontrollable, you've got to drop alpha just to not get knocked out of the box. You have to know when to go low alpha and when to go high alpha. When the market is relatively calm, and especially when it's trending in a one-directional manner, you want to focus on high alpha stocks that have big volatility, and big volatility along with high momentum and velocity. But if you've got a wild and unpredictable market environment, you want to focus now on more low alpha scenarios. So this is why we need price diversification. All right. We also want to have sector diversification. Now, what do I mean by sector diversification? Let's take a look here. Sector diversification is like, I don't want all of my stocks to be bank stocks. That's ridiculous. That's too much duplication in my family of stocks. Guys, a big part of success is choosing the right things to trade in the right price range. I'm going to repeat that, write that down. Hint, hint, write this down. One big key to successful trading is choosing the right things to trade in the right price ranges. So I don't want just all of my stocks that I trade to be bank stocks. I need my stocks to spread over a few key sectors of the market. So I want market representation through some of the broadest sectors out there. So in my master list, and let's say I encourage my traders to have a list of 10 things that they live with every single day of their lives. 10 things. This is another mistake a lot of traders make. They don't have a master list. They just trade anything and anything and everything that's in the news today or that's moving today. Wrong. No professional in the world does that. Only novices do that. Only novices float around like they have no home, like they're vagabonds, like they're begging bums on the street. We don't do that as professionals. We choose our family members carefully. And when we choose them, we don't abandon them very quickly. We trade them every day. We spend time with them every day. We give them attention every day, just like our children. This Master 10 trading list, this is your family, and you don't abandon your family. So how do we make 10 stocks? Basically, we're going to choose from these sectors. We're going to have like one or two banks. Chip stocks are semiconductor stocks. We're going to choose one or two chip stocks. I think oil is key in today's inflationary market. You want an oil stock or two in your list. Fintech is always huge with great alpha at times. You want fintech representation, financial technology stocks. You want big tech. Big tech has been the main driver of the markets over the past decade or so. We need some big tech stocks in our list, and it wouldn't hurt to have a retailer or two and a transportation stock or two. So these are some of the key sectors of the market that you want to have at least one stock that represents these things, right? All right, now look, I've given you on the right-hand side of this matrix here, I've given you a sample Master 10 list. So look at, again, remember guys, I made a mistake here. This is actually supposed to read above 100, right? So don't forget that. This is above 100. So now take a look at my above 100 category. I'm going to have 20% of my 10 stocks, that's two stocks, above $100. I chose for this master list $146 Apple. Apple's was currently trading at 146 today or so. That's one of my picks there. Amazon, 120. Now, Apple is big tech. You know, Amazon you can look at more as big tech retail. So you've got big tech and retail in the same stock, Amazon. So I've got three sectors. Even Apple is more retail and big tech too. So we got with these two stocks, we are representing, guys. We are representing big tech and retail. All right, with Apple and Amazon as my two choices in the top 20% above 100. All right, now let's go to the bottom 20% where we're going to focus on stocks that are two stocks below 50. And there are a variety of stocks here that are good trading stocks. A couple years ago, it was hard to find things below $50 that were good to trade. Now, because of the bear market we've been in as of October 2022, there are many stocks below $50 that are good, high alpha or higher alpha trading stocks below $50. So for my example here, I've chosen Citibank. So now we're representing banks here. That was currently trading around $43 today. And Uber, which is transports. All right. Uber, transportation. All right. Now, that's my two stocks below 50. The majority of my family is going to be in between, where these share the characteristics of above $100 stocks, as well as some of the characteristics for below 100. So this is the sweet middle. This is the middle. This is the sweet spot of your trading list, your master trade list. Okay. And I've chosen an oil stock here. This is Exxon. All right. That was trading at 100. So right at that upper level today. Starbucks. All right. That borders on sort of retail. All right. $90. Baba is so many different things. It's fintech, it's retail, it's big tech. All right. And there is AMD, which is this is a chip stock, semiconductor stock here. All right. And Oracle is more big tech, and square is fintech. So you see, we've got all the categories covered here in a list of 10. Each some of the stocks cover multiple categories, which is really cool. And you can start off, if you're an equity trader, you can start off using my sample list right here, guys. Take a snapshot. Write them down really fast if you like. This is a great starting point. Now, this family can be tweaked as you go along. I'll talk about that later, how you tweak this. You can start off with this list, but you can tweak this by replacing one for another every now and then. You should not be tweaking every day. You should not be tweaking every single week. You must spend in a great deal of time living your life with each one of these things. Your key, one of your keys to success is becoming intimate with what you trade, becoming so intimate that you know them almost like your children. Like you know when your kids are lying. You're lying to me. You know when they're about to do something naughty. You know when they're happy. You know when they're sad. You know when something's wrong. That is because you spend your life with your children. You may not know the same thing for a stranger, but you know the same things for people that you spend the majority of your life with. Same thing in the market. Professionals trade the same things every single day of their lives. Now, I'm not saying that you're going to have a trade in each one of these every day. I'm not saying that. They're just with you every single day. And it's not a list of 200. It's not a list of 50. It's not even a list of 20. It's a list of 10. 10 is enough. All right. All right, good. So we've covered step 3. Guys, just these 3 steps. Maximum loss per day, maximum loss per trade, which is derived by dividing the maximum loss per day into 3. Give yourself at least 3 chances. And taking these numbers, the maximum loss per trade, to the right stocks that are spread over the right price range and over the right depth of the market, the right sectors. Wow. Guys, guys, think about this for real. Seriously. How many people in life really doing these 3 steps? How many would you guess? Seriously. I'm curious what you think. How many people are out there with something structured, even in this basic way? How many people have a specific set list and know how to break their list down across the market and across the right price range? How many people have their numbers so set that, okay, this is my maximum loss per day, my maximum loss per trade. I'm never going to lose more than this on any given trade. I'm taking this number and I'm going to these stocks over 100, these stocks under 50, and the rest in between. How many people are really, really doing this? That's right. Ty says like maybe 2%. The life of Pablo says no, 1%, 5%. You're all right. It's somewhere in between that. And guys, it's so basic, but it catapults you out of the crowd. These 3 things separate you out of the whole crowd. You're already the minority in the whole market. Globally, worldwide, you're now can say I'm in the top 5%. I'm in the top 5% of everybody in the world with 3 things. And without anything else, you can now just start throwing darts at your list and applying the $66. Guys, think about this. You can throw a dart at that list. You can just, boom. Okay, oh, it's Amazon. Now throw your $66 maximum loss at it. Whoo-hoo, right? You understand what I'm saying? Oh, okay, now it's Uber. Okay, boom, I'm going to buy Uber. Now throw your $66 maximum loss at Uber. Guys, just by math, sometimes Uber's going to go up $100. All right, pick another one. Okay, market's down. Market's going down this morning. Okay, boom. All right, Starbucks. I'm shorting Starbucks this morning. Throw your $66 maximum loss at it. This is Guys, I promise you, without any skill, you're going to catapult your success just because the math is right. You know what I'm saying? Just because the freaking math is right. It's crazy simple, but so powerful. All right, let's keep going. We got 7 more things to go here, guys. 7 more. This is crazy, right? Crazy. All right, let's do this. All right. Boom. Now, step 4. Guys, many of you have heard me say this. Many of you have heard me pound the table on this. Some of you might even be sick and tired of it, but you shouldn't be. I need you to add step 4. Do not lose more than 1 bar the vast majority of the time. Do not lose more than 1 bar on your trades. Now look at what I'm saying, guys. Don't lose more than 1 candlestick bar on the chart. Don't let a stock drop below the low of more than 1 bar. If it breaks the low of 1 bar out, don't lose more than 1 bar. Not 2 bars, not 3 bars, 1 bar. Now, let's take a look at what I mean by that. Now, here's what's really cool about my presentation to you today. I use every single example of a real trade that was taken by one or more of my traders today. I just went to the records and grabbed their trades. I see everything they do. I grabbed my traders' trades. Some of them are in this crowd today. They will tell you, I did this trade, right? All right, so Uber, this was a trade taken by a variety of traders this morning. All right, boom, right there. Let me show you. Boom, they bought that bar. My traders know this as a clearing elephant bar, and they know it as a clearing elephant bar that is also igniting from not only the 200 period moving average, but the 20 period moving average at the same freaking time. Oh my God. Like, my traders will tell you that this is like, you don't think, you don't guess, you don't analyze, you don't call up the freaking psychic hotline, you don't ask your partner, or you don't check your friends in the freaking WhatsApp chat room. You just hit the freaking buy button. All right? Clearing elephant bar. Boom. Why is it clearing? It's clearing a whole bunch of data to the left of it. It's like a freaking skyscraper, the tallest skyscraper around for miles. It's tallest skyscraper around for miles. That's clearing. And the origin of the clearing is off of a key moving average. In this case, the origin is off both key moving averages, the 200 and the 20. All right. But boom, they buy this bar. What do I mean by not losing more than 1 bar? They buy into this bar. Let's say they buy 500. Why max? Because in reality, it's lower price stock. But let's say they're not that aggressive. Let's say they do 200. That's 2 lots, 200 shares. They're not going to lose more than this bar. They're going to buy this bar, but if the stock breaks 1 bar, they're out. Guys, let me just tell you this. If you can lose only 1 bar the vast majority of the time, you will be in this game forever. Forever. It will be impossible for the market to eliminate you. You will grow old trading the markets. You will never be blown out. You will never be taken out of the game. You will never be destroyed. You will never be rocked. You will never need to seek counseling. You will never crash your computer against the wall. You will never throw your keyboard on the ground to break it. You will never be frustrated as a trader if you limit your losses to 1 bar. Now, let me tell you this. The reason why is because you're going to get trades that run 18 bars. but every single loss is going to be 1 bar. You're going to get trades that run 5 bars, but every single loss is going to be 1 bar. You're going to get trades that run 8 bars in a row, but every single loss is going to be 1 bar. You're going to win 14 bars, 12 bars, 3 bars, 4 bars, 2 bars, 1 bar, 15 bars, 40 bars, but every single time you lose, you will limit your loss to 1 freaking bar. And I will tell you just this, number 4 rule will throw you into massive profitable territory. Just math. How many times is your stock going to run more than 1 freaking bar? A lot. How many times will your stock deliver more than 1 bar loss for you? Never. Think of how you're skewing the math in your favor. So now we have to combine 2 things here. Listen to me carefully, right? I need you listening carefully here. You have a maximum loss per trade of 66. Now I'm telling you that you are to lose no more than 1 bar. This is where your losses less than maximum come into play. So if the low of 1 bar is $42 loss, now your loss is $42. If you buy this bar and the low is $56 loss, now your loss is 56. It's not 66. It's 56. If you buy this bar and now your stop is under the low of this bar and the low of that bar is $35 loss, now your loss is 35. So remember, you have a maximum, I'm not going past 66, but you have many losses, 1 bar, that are way less than 66. Now, I hope you got that. I hope you got that. You understand? Okay. Now get this. Check out how amazing this is, right? Check out how amazing this is. Right, check this out. Check this out. Now, let's say if you do 100 shares, boom, you buy this 100 shares, and you're going to not lose more than 1 bar, and you realize, shoot, I would only be losing $30 if I lost here. Well, wait a minute, I can go 200 shares and I would be losing $60, and that's still less than my max. Boom. This is a 200 share play, not a 100 share play. You're still maintaining less than that maximum loss per trade. This can help you be a size manager. Do you get this? You got $66 to work with, and if 100 shares is just too light, go to 200 shares, as long as you're not violating that maximum loss per trade of $66. So it can help you go up and down the size scale. This is freaking amazing. People are risking their families' financial welfare by not doing these simple but powerful things. People are out there gambling their money away because they're not doing these basic, simple but powerful things. People are out there throwing money out of the window that they've worked hard for because they are doing things sloppily. They are doing things that are non-systematic. They're doing things in an unstructured way with no freaking plan. No parameters, no maximums, no anything. They're just farting in the wind. This is not how you become a professional. You become a professional with these steps. All right? All right. Powerful, guys. Powerful. Powerful stuff. You're not going to lose more than 1 bar. All right? My traders know that this is a buy point. Boom. Buy above a red bar. Above a red bar. Now, if I'm buying above the red bar, where's my stop? 1 penny below that bar. I'm not going to lose more than 1 bar. My traders know we buy it above the highs of tail bars. There's a tail bar. I'm buying above the high of the tail bar, but I'm not going to lose the tail bar. I'm buying above a red bar, but I'm not going to lose the red bar. 1 bar max. 1 bar max, traders. Woo! This is simple, but it's powerful. Most things that are powerful are simple. Don't forget that. All right. Here's another trade, my traders. Many of my traders took 2 trades here. 2 key trades here. Here's that clearing event again, guys. See that tallest. Here's that skyscraper, in a way, the tallest building for miles. There's no building for miles taller than this one. And where is it originating from? It's originating from one of the key moving averages. Boom. So a lot of traders took that. Boom. Right there. They bought into that bar. 1 bar stop right there. Boom. Look at their risk. Now look at, let's say they bought here. Now look at the risk. See that? That's their risk. Now look at the reward. Now let me ask you, how many of these risk circles are inside of this profit circle? You can freaking lose many, many times and just grab one of these and be in this game for a long time. This is what I call the snowman. You want the snowman. Do you know? You understand? You want your losses to be the head, your profits to be the fat gordo, the fat body. El gordo. I want my profits to be el gordo. Fat profits, little puny losses. All right? Okay. 1 bar losses, guys. Another trade my traders took was this power clearing elephant bar. Remember the clearing green bar? Here's the clearing red bar. It's clearing a lot to the left. Boom. So they jump into this bar. Boom. They're going to risk one. They're going to risk that bar. That bar is pretty tall, so they might not be able to do 5 lots here. Well, it's a high price stock, so they might only be able to do 1 lot here, 100 shares. But that's okay. All right. 1 gets them this morning from this price level. What does that get them here? Let's see. Let's call it 138.75. We drop to 137. Dude, that's like $170 with 100 shares. $170. Some of you barely make $175 a week. And in some places around the world, they barely make $175 in a month. And this is in 2, 4, 6, 8 minutes with only 100 shares. Wow. Risking only 1 bar. Boom. Risking only 1 bar. Okay? If you wanted to play the color game all the way back, boom, you're buying above this red, risking only the red bar. Look at your reward. How many of these heads fit into the fat gordo body, the fat body? All right, you want to buy this tail bar here? You're risking only the tail bar. You're risking only the red bar. You see? Powerful. You're risking only the red bar. It's not rocket science. It's just putting together a very well put together structure. Here was 2 major plays off of NVIDIA today. Some of my traders might be with me who played this today. All right. Boom, there's that clearing again. Tallest skyscraper around for miles. Boom, risk 1 bar. Add to the play. Boom, come in here. Boom, risk 1 bar. Add to this play here above red, risk 1 bar. Profits out. Guys, what is this? What is this initial? Was that initial entry on that skyscraper there? 130, let's call it 133 to 136.50. 100 shares. That's $350. $350 this morning from one lot. Boom. That's without the ad. If you do the ad, another one lot, it's more than $350. Some people throughout the world don't make $350 in a month. Some barely do it in a week. This is in 2. These are minutes here. So 2 minutes, 4, 6, 8, 10, 12, 14. All right. 16 minutes. My work day is over in 16 minutes. You don't have to work hard in this life. You have to work smart and work right, not hard. Right? The poorest people on earth work hard. The wealthiest people work smart. Stuff. Pat myself on the back, pat myself on the shoulder here. Good job, Oliver, good job. My mother used to say, Oliver, there aren't many people in life that are going to reward you, that want to reward you. So reward yourself every now and then. Thanks, Mom. That's what I'm doing now. Good job, Oliver. All right. Here. Oh, wait. The other trade, guys, I'm sorry. The other trade that my traders took here, they took this topping tail bar. Now, this is more of an advanced play because it's against the moving averages, but it is what we call the dual wide effect. I've talked about that here on the channel. Double wide, right? The 20 is wide from the 200. The stock is wide from the 20, giving you these 2 layers of wideness. Now you can go the other way when you have dual wide space, and they take this topping tail bar, boom, 1 or 200 shares, 1 bar loss, and the rest is history. There's that snowman again. Let's draw him. There we go. El gordo. El gordito. Yeah, there it is again. If you can keep the snowman ratio, the head is the losses, the fat part of the body is the profits, you're in this game forever, traders. You're in this game forever. These are all plays from today, this morning. Here's that one again. Boom, guys. Remember the dual space I explained to you, right? When we got dual space, you can go the other way. See these 2 levels of wideness here. So how do they go the other way? When red takes out green right there, boom, and they risk 1 bar. They're risking this. There's that snowman again, and the rest is history. El gordo. I like saying that. I don't know why. It's like that. El gordo. Okay. All right. I love this game. I love this game. All right. Step 5. Step 5 here. trade with the 20-period moving average, guys. We're tightening this up, making it more and more professional every single step. Trade with the 20-period moving average the majority of the time. Remember, the only time you trade against it is when you've got dual wide, right? So we're playing against the 20-period moving average here, but that is the exception when you have dual wideness. Now I have videos on this, all right? But dual wideness, that's when we go. But when we don't have dual wideness, you're going to trade with the 20-period moving average. So you're going to take this trade with it in the direction of the 20, in the direction of the 20, in the direction of the 20. We don't fight the 20 unless we get dual wide space. We trade with the 20-period moving average, not against it. I did a study on all of my traders' losses over a 6-month period. This doesn't mean that the losing trades are from losing traders. I just took all of the losing trades from the losing traders as well as the winning traders, and I categorized the losses. And over 80% of the losses were the result of fighting the 20-period moving average. Guys, if you really want to up your consistency, up your profitability, the majority of your trades, except when you have dual wide space, the majority of your trades should be going in the same direction as the 20-period moving average. Here is a popular trading stock for my traders. They trade Citibank. Everybody in the world practically knows what Citibank is. All right? Look at that 20-period moving average, guys. Look at how smooth it is moving to the downside this morning. And so all they typically do is wait for red to eliminate green. Now, some of my traders took this red eliminating green here. You see, that red eliminated this green, and they risked 1 bar and they got stopped out. Now, I did have a lot of traders that get stopped out there. It happens. But many of them got right back in on the next trade, which is when red eliminates the next green. Boom. Risk 1 bar. And now the rest is history. Red eliminates green. Boom. All right. Red eliminates green here. Boom. Red eliminates green here. Boom. All right. Powerful. Trade with the 20. The 20-period moving average is like a river, a powerful river. And whenever you jump into a powerful river, whichever direction the river is moving in, it's going to sweep you away with it. So if the river is river is flowing to the downside, you can even be a little sloppy and still probably win the vast majority of the time if you're playing to the downside, because the flow, the momentum, the velocity of the river is going to take you to the downside. Even you and some of your mistakes will be taken in the right direction here. All right? Color game, play the color game in the direction of the 20-period moving average. All right? Play the color game in the direction of the 20s declining here. We're going to play the color game. When does red eliminate freaking green? Right here. Boom. Red is eliminating this green. Red is eliminating this green right here. Red is eliminating this green right here. You see? You play the color game in the direction of the 20-period moving average. You can pretty much insert yourself into this at any point, and you're going to be swept away in the right direction most of the time. If you don't try to get cute and go against the 20. Now, again, you can go against the 20 when you have the wide dual space. Those 3 points are stretched far apart from each other. That's different. When you don't have the wide space, you're playing with the 20-period moving average. Up, you're a buyer. Down, you're a short seller. You're betting on the downside. All right. Playing with the 20. All of these are from today, guys. All right. Play the color game. Boom. Red takes out green, risk 1 bar. All right? Boom! Risk 1 bar. Okay? You're probably 3 wide now. So you want to be careful. There's the wideness of the three things, let's say. And now you can go against and start jumping into the skyscraper bars. Boom! The other way, risk 1 bar. Now we play the color game in this direction. Boom. Color game. Boom. Color game. Boom. You get it. Tail bar. Boom. Color game. Boom. We're playing with the 20 now again, back the other way. This is not rocket science. This is 12-year-old subject matter. 12-year-olds understand this. Trust me, I have a kids program. My kids range from 8 years old to 15 years old. They understand this. Oh, that line, just go in the direction of that line? Okay. Oh, when the red takes out green, that's when I enter? Okay. Don't lose more than 1 bar. I can count to 1. I always tell traders, guys, can you count to 2? Yeah, then you can trade. People at cocktail parties ask me this all the time, guys. They're like, Oliver, yeah, we're sipping martinis. And they're, oh, you're Oliver. You know, I was thinking about getting my my kid involved in trading. What do you think? And I says, well, you think he's going to be any good at it? I say, well, can he count to 2? What do you mean? I said, can he count to 2? Of course he can count to 2. He's like 14 years old. Well, then he can trade then. Now, whether he will count to 2 correctly, I don't know. But if he can count to 2, he's got a shot. This is a game of 2s, guys. You know? There's 2 colors, red and green bars. There's 2 actions, buy and sell. There's 2 basic major directions, up and down. There's 2 results, win and loss. There's 2 major moving averages, 220. There's 2 locations. I'm near a moving average or away from a moving average. There's 2s all around us. If you can count to 2, we can do this. You know? All right, let's go. Let's go back to this. Trade with the 20. Here's Coca-Cola today. Guys, Coca-Cola today. Just play the freaking color game. Red eliminates this green. Risk only that green bar. That's your protection. Red eliminates this green. Risk only this green's bar. Red eliminates green bar. This green bar right there. Boom. And on and on. And you're playing with the 20. Red eliminates green right there. Boom. Risk that bar. All right. Now, once you start to get wide, just be careful. Because wideness kind of ends the easy money in that direction. Okay? Color game. Boom. 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 Guys, it's not freaking rocket science here. Boys and girls. Boys and girls. Can you identify when the 20-period moving average is rising and when the 20-period moving average is declining? Yes? Okay, good. Can then you identify when a red bar takes out the low of a green bar when the 20 is declining? Can you identify when a green bar takes out the high of a red bar when the 20-period moving average is rising? Yes, you can. Can you, just in case it doesn't work, make sure you don't lose more than $66? Yes, you can. Can you most of the time only lose 1 bar, which means that you're going to lose less than $66? You can. Well, now you're a freaking professional. If you can do just these things, you're already a professional. No novice does these things. Not even one in the entire world. No novice does these things, I'm telling you. I've already explained to you. Not a single one. And there are tens of millions of novices out there. Not one does this. You will be separating yourself from the vast majority of market participants just by following these basic things. All right, let's continue. All right, let's continue. All right. Again, trade with the 20, guys. I've kind of beat this horse dead here. You get it. With the 20. Color game with the 20. Boom. All right. That's all we're doing. We're trading with the 20-period moving average. All right. Now, step number 6. Enter your trades near the 20-period moving average or near one of 3 key moving averages. So look at what I have here. The 20 is the main one, but also you can enter trades near the 200 or near this baby moving average, the 8-period moving average. So either something should be happening where your action, the action you're taking is somewhere near it. Doesn't have to be touching it, just somewhere. Make sure it's somewhere near that moving average, or that moving average. Again, close is good enough. It doesn't have to be touching it. Let's look at some examples here. So let's go back to our city trade. My entry below this green is right there. Boom. I am near the 20-period moving average. I don't have to be touching it, just close. Just not way down here away from the 20. Just not way down here away from the 20. Just not way down here away from the 20. You see what I'm saying? Just not way down here away from the 20. We need to be near the 20. Red takes out green, near the 20. Near the 20, near the 20, near the 20. We take profits away from the 20. We get in near the 20, take profits away from the 20. We get in near the 20, take profits away from the 20. We get in near the 20, we take profits away from the 20. And then when you're wide enough, 3 fingers wide, we can take the skyscrapers. Remember that? Boom! Risk 1 bar, and the rest is history. All right? Boom! All right, this didn't go so far, but you get the point. It's powerful. Most things that are powerful are also simple. That's just the way life is. JP Morgan delivered pretty much the same thing. Near the 20, topping tail bar play. Near the 20, near the 20. We're taking profits away from the 20, away from the 20, away from the 20. If you make sure that you are doing the color changes and the tail bar plays near the 20 and you're doing it in the same direction of the 20, my God, and you're applying the 1 bar stop rule and no more than $66 max rule, oh my God, will you be in the elite class? Here is that Uber trade again. I told you that a lot of traders they bought this skyscraper bar, boom, 1 bar stop. Look at how it's originating near the 200 and the 20. They also added here on the color change there, boom, on the color change there, boom, on the color change there if they want, all the way to being away from. Now, take a look at this stock. Look at how far, though, you are from the 20. Do you see? So this means that we have to now, on the really powerful moves, we might have to use the 8 instead of the 20. You understand? So let's take a look at this stock with the 8 on it. Boom! There you go. You see? Now we're in business. This is not every move up is either an 8-period moving up move, a 20-period move up or an 8-period move up. Every trend that's flowing is either going to be largely a 20-period moving average flow up or down, or an 8-period moving average flow up or down. In this case, we've got an 8-period moving average flow to the, so as long as we're getting in near the 8, as long as we're getting in near the 8, as long as we're getting in near the 8, we're okay. And when we move away from that 8, we're taking profits. When we move away from that 8, we're taking profits. It's not rocket science. All right. Now look, wide. Well, let's go back to, we can go back to this and see the wideness. Wide, wide, wide. Now we can play the other way. Boom. Boom. Do you see? Boom. Boom. But only after wide. Wide. Back to narrow. Back to wide. Moving back to narrow. You guys know this. I've gone over this over and over again right here on this channel. All right. Everything is from today. Everything is from today. Take a look at Meta, guys. Boom. Here is our, remember our little building there. Boom. But we see that it's not a 20-period moving average trend. It's more of an 8-period moving average trend. Green takes out red right there. Boom. All right. Tail bar entry right there. Boom. All right. You could have done this one. Green takes out risk no more. You might have gotten knocked out, but went right back in here. Boom. And you want to take profits away. You want to take profits away. Get back in near. Take profits away. All right. It's not rocket science. I keep saying it. All right. This move to the downside in UAL. Boom. There's that clearing elephant. It's clearing out a lot of bars to the left. Boom. Now play the color game. When do we eliminate green? Right here. Boom. We eliminate another green here. Boom. But as long as you're not doing it down here away, your key average is now the 8. It's not the 20. Some trends are 8-period moving average trends. Some trends are 20. But your entries need to be somewhere near one of them. Boom. Now, if you split the space, if the stock and your 20 are rather apart, then if you split the space and go a little bit closer to the stock, you've got the 8. So let's split the space. See the space between the stock and the 20? Now, let's split it and go just a little bit further. So if we split the space evenly, that's probably where your 10 is. And your 8 is just a little bit less. You see? Boom. I can imagine where that 8-period moving average is. Powerful. Step number 7. Journal your trades 20 in blocks of 20. It's 20 trades by 20 trades. My traders know this. You do not study your performance until you have collected 20 trades. There is nothing to study after 3 trades. Nothing whatsoever. You can't study after 5 trades. You can't investigate. You don't have a big enough data set. You need a big enough data set to catch patterns in your trading. There's something that you might be doing consistently wrong, but you can't find consistency in 5 trades. You need 20 trades to find some patterns. You need a big enough data set to find something that you're doing repetitively right or repetitively wrong. Preferably, you'll be looking at something that you can improve on. I keep doing this too many times. The next set of 20 trades, I'm going to tweak that. You sit back every 20 trades and evaluate who you are. Who you are the results, as a trader, are the results of 20 trades. The picture of who you are emerges every 20 trades. Now, my traders use a system that we've developed that helps them keep track of their 20 trades. So, for instance, here is a trader that has done a set of 20 trades. All right, right here. I want to show you that. This done a set of 20 trades here. He has done 28,800 shares. That's a lot of trading for 20 trades. So the trader has resulted in a gross loss before commissions of $1,382. With commissions, his loss is $1,500. Now, it's clear right off the bat to me that this trader is over trading. He needs to focus more on quality and drop quantity down to a certain extent. All right? And in these numbers, his percentage, his percentage of winning is only 40%. All right? And look at his maximum loss per trade. This is not maximum loss per day. This is his maximum. This is his average. I'm sorry. This is his average loss per trade. Not even the maximum. It's the average, which means that sometimes he's losing as much as $300 on a trade. His problem is here and there. You understand? I can see it in his numbers. All right. You can't have your average loss per trade at 180 and your average win per trade at 60. You've got the game backwards, young man. I can easily fix this trader up just by looking at his numbers. He has to go back to step number 2, average loss per trade. I mean, not the average, maximum loss per trade, 66. Boom. I immediately eliminate that. How can he not get better by bringing him back to step number 2? How is that possible? How is it possible for him to get worse? No, he can only get better if I bring $66 back to his life. This is the value of judging yourself. 20 trades by 20 trades. Get to 20, sit down, throw some music on in the background, pour yourself a scotch or a glass of wine, and let's do some investigation like this. This trader probably doesn't even realize he's violating the $66 here until he sees these 20 trades staring him in the face like this. Here's another trader. Look, 20 trades. Boom. Now this trader, look, this trader, the other trader did almost 29,000 shares in the 20 trades. This trader did less than 10,000, almost a third of the other guy's total. Not over trading. Look at the results. All right. Now, look at the winning ratio. The other guy was 40%, he's 75%. Look at his average loss per trade. Can we improve on that? Absolutely. Let's bring this down to 80. Doesn't have to go all the way to 66. Let's bring it down to 80. Make him better. Wow. This is how you see yourself. This is how you view yourself. This is how you make progress. Understand this, guys. This is a journey toward trading mastery. I want all of us to be on the same journey here. Do you understand? We're all on the same journey. But most people don't know how to judge where they are in the journey. Where are you in your journey? How far in the journey are you? You can't judge how far in the journey you are by P&L yet. P&L does not tell the whole story. In fact, P&L is a liar a lot of times. Your profit and loss state right now doesn't tell you your growth right now. So how do you measure where you are in the journey? Every 20 trades. Each set of 20 trades is one step in the journey. Do you understand? Each step in the journey is 20 trades. You make 20 trades, you just made one step further. You're one step further along the path to trading mastery than you were before. In every 20 trades, boom. So how many sets or steps are you in the journey? You should be able to tell me when I say, all right, so how are you doing? Where are you? You say, Oliver, I'm on my 12th step in the journey. That's 12 sets of 20 or 11 sets of 20. You can say, I'm on the 20th set of my journey. I've completed 11 steps. I am 4 steps into the 12th set. I've got 16 trades to go before I complete this step in the journey. Wow. How many people can come at you like that? How many people can come at you like that? I'm 11 steps into the journey. I'm in the midst of completing my 12th set, my 12th step in the journey. I'm 4 trades into that. I've got 16 more to go. Whoo! That's professional. That's a freaking professional. That's not, I just wake up in the morning and hope today is better than yesterday. That really? That's not how you make it. Just hoping. I just hope this trade's better than the other trades. I hope today is better. They do absolutely nothing to make it better. They don't even know where they are in their journey. They don't know what they're freaking focusing on. They don't have a list of 10 stocks. They don't have things structured to where a maximum loss per day, maximum loss per trade, lose only 1 bar, play in the direction of the moving average, go against the moving averages when you have the 3 things separated. They don't have anything like that. They're just like, I just hope today is better. I hope today is better, Oliver. Like it's going to fall from the sky like that just because you hope. This takes work. This is the work. 20 trades by 20 trades is the work, guys. Put that work in. Map out that journey. All right, let's go. Okay. Step number 8. Keep track of your numbers. Guys, your statistics are your everything. Your numbers are who you are. You are your numbers. You are your statistics. And you got to keep your finger on the pulse of who you are. Know thyself is the age-old wisdom. Know thyself. Know who you are, traders. And who you are your numbers. You are your numbers. You are your numbers. You're your batting average right here. You're your average loss per trade. That's who you are. This trader, out of 117 trades, so he is 10 steps in. Do you understand? 10 steps of 20 trades in the journey. I'm sorry, not 10 steps. He is 5 complete steps in the journey. He's completing his 6th step. He's got 17 steps completed in the 5th step. I mean, in the 6th step. I'm crazy here. He's got 5, right? So he's got 5 steps completed. He's in the midst of completing his 6th step. He's 17 trades into the 6th step. And he's got 3 trades left to complete 6 steps. He is 82,000 shares in. He's up $6,000 in total after commissions, up almost $5,600. His best trades happen in Facebook. His worst trades happen in Square. All right. He is got a batting average just slightly above 50-50, and his average loss per trade is 105. His winning average win is 172. So the difference between the 172 and the 105 is where his gains are. Now, can we make improvements based on knowing who this trader is? Of course we can. What we can do is, I believe that we can drop this a bit to maybe 80. Now, this is probably going to help this go up. And if this goes up, this will go up as well as this. And once he's there, once I can improve on this, just the average loss per trade. So this trader needs to make his maximum loss per trade 100, or he can go to something like, if his maximum is 100, then many of his trades will be $80, $70, $60. But he can do something like this as well. Maybe he says my maximum loss per trade is 80. That's really aggressive, but he can make it 80. So now many of his losing trades are $40, $50, $60 on one bar stop outs. So he can dramatically knock this down and prove that would automatically improve on these numbers. And once he's there, I tell him to increase the frequency of his trades, because that's low volume for 100 and almost 120 trades. Boom. And then I can have something like, let's get rid of Square. Let's replace Square with something else. If it's really, really bad. If the majority of your losses are coming from Square, let's get rid of frickin' Square. You'd be surprised, guys. Check this out. You'd be surprised. You'd be surprised when I ask traders, how many times I ask traders, what's your favorite stock? And like Square. I like trading Square. Why do you like trading Square? Because it moves. And then we look at the numbers and like, dude, that's your worst stock. That stock is responsible for 80% of your losses. That's your favorite? What are you talking about? What are you doing? Get that Square out of your list. Come back. You got 2 hours. Bring me another stock. Let's get rid of Square, and you automatically just improve, just like that. You improve right there just by removing Square. Do you realize that sometimes it is easier to accentuate what you're good at than to fix what you're bad at? It takes 3 times the effort to fix something you're bad at than just dump what you're bad at and throw all of that energy into what you're good at. This guy is bad at Square. Take a look. This guy's bad at Square, but he's great at Facebook. Let's freaking drop Square and put those trades into Facebook. And then, so let's do this. Let's eliminate Square. Let's drop this to 80. Let's put those trades there, and let's pick this number up a little bit now. Boom! This guy is instantly, for his next set of 20, he's instantly better. This is the power of knowing who you are. This is the power of keeping your finger on the pulse of your statistics. This is the power of knowing your numbers. You are your numbers. You are your statistics. You are your trades. How many people are doing this? Honestly. How many people are doing this after every 20 trades? I would say 99% are not. If you do this, you're in the top 1% of the world. That's crazy. Most people don't know how to judge where they are in the journey, 20 steps at a time. Most people don't know how to see who they are, their statistics, their numbers. Most people don't even know where to frickin' start. Most people don't even have a master list that they trade from. They're spread all over the market like a frickin' ship at sea with no map, no destination, batted around by every little wind and little storm and whatever. They don't know where they're going. They don't have rules for themselves like I will not lose more than this on any given day, and I will not lose more than $66, and on most trades I will not lose more than one bar, which will mean that I will lose less than $66. I will always trade in the direction of the 20-period moving average unless we go wide, and all of my entries will either be close to the 200, close to the 20-period moving average, or close to the 8-period moving average. Boom! That's a professional. I will judge myself 20 trades by 20 trades, and I will keep track of how far along in the journey I am, 20 trades by 20 trades, and I will always keep my finger on the pulse of my numbers. Woo! This makes you elite. Why do something and just be average? What's the purpose of that? If you're just going to be average, just don't even get out of bed. The heck is that? Don't even just be good. I would say, just forget about the day if you're going to just think, I'm just going to be good today. Good? That's it? No, traders, elites. I want you elite. F good. Forget normal. No, normal's not even in the equation. We got enough normal out here. Jesus. You know what's normal? The lack of intelligence is normal today. We've got enough normal. No normal. And you know what? Good doesn't cut it either. Good doesn't cut it either. Elite. Top 1, top 2%. Elite. Good is like 80-20. Like I'm in the top 20% of the world. You know, you've heard of the 80-20 rule, right? That's being good. When you're like better than 80% of the world, that's good. When you're doing things that 80% of the world's not doing, that's good. Yeah, but that's not enough. Not with me. I want you to be elite. No one is doing this. Very few people are doing this. This makes you elite, my traders. All right. We got two more. We got two more things here, guys. Two more. Let's go. Am I on time? Ooh, I'm on time too. Nice. All right. Look at this trader. This is the same trader, guys. See the $5,800 in net P&L on the left-hand side? So $5,797. So this is just his results in the form of a chart. It can be helpful, guys, looking at a chart of your performance. So he's definitely in a powerful uptrend. This trader rarely has 2 losing days in a row or what have you. And so he'll have 1 losing day and bounce right back, which I like. So you can't keep a good trader down, you know. Here's a 2-day blip, but that's still fine. But what I notice here is that the trader becomes more susceptible after a very decent run in profitable territory. So if you look here, after a decent run, boom, after a decent run. So that's cool. He's keeping the loss. Some traders get their losses are clustered together. So when they start breaking down and losing, they just fall apart and their losses are all clustered in one area. And it's just red, and they do great damage. This trader's not doing great damage. He's controlling himself. He doesn't let the losses get out of control. He bounces back the next day, and I like that. But what I would tell this trader to do, basically looking at his chart, is that after a certain set of bars, so I would say after you've had 1, 2, 3, 4, let's say after you've had 5 winning days in a row, I want you to cut your size in half. So don't go to 500 shares anymore, no more than 300 share lots on your position, because as you get to 5 levels of profitability, you're moving yourself closer and closer to where you kind of break down a little bit. So let's do some size management here. All right. And I told you I would go back here and I'd say, let's get square out of this. All right, let's get square out of your trading here. And let's get your $80 down. Let's get this down to $80 here. Let's get rid of square. All right, let's boost this up a little bit. Okay, and let's drop our average share size in half after 5 every 5 green bars in a row. We're going to drop. You see what I'm saying? We're going to drop our average size that we play. And boom, just those little tweaks will cause this trader to skyrocket. You understand? Freaking torpedo. All right. Here's a trader where we look at their performance by the stocks that they have, right? By the stocks they trade. So Facebook is by far this trader's best performer. Um, American Express is the worst. We're going to get rid of this. We're going to take the trades from this and throw those into Facebook. All right. And maybe you want to throw a couple into Microsoft here. Boom. Fixed. Done. Get rid of the problem. Don't try to trade American Express better. Just get rid of that thing. Boom. Now we look at their trades by the day. What's your best trading day? How many freaking traders know what statistically their best trading day is? This trader's best trading day by far is Thursdays. His worst trading days is Tuesday. This is in Spanish, guys. So this is Monday, Tuesday, is Tuesday, Wednesday, Thursday, and Friday. It's just ranked in the order of most profitable. So Tuesdays, he's got to really watch himself. All right. But every other day is great. It's just Tuesdays for whatever reason. Yeah. This is worst trading day of the week. You got to know what your best and worst trading days are. We even break this down even further. What's your best trading hour? Are you good in the first hour of the day? Are you the best in the last hour of the day? Are you better in the second hour of the day? Or is it the first hour of the day? Or is it the last hour of the day? Those are usually the main hours. First hour, second hour, or last hour. The 3 hot spots in the market. We're like freaking baseball. We're like a professional baseball league. We keep track of everything. How many times you wear black socks when you're trading? How many times you wear gray socks? How many times you're wearing slippers while you're trading? How many times you're wearing a robe when you're trading? We keep freaking stats of everything like the freaking baseball league. He sneezed a 3rd time this week. He's 1 sneeze below average. We're obsessed with these numbers because you are your numbers. You are your statistics. And keeping your finger on the pulse of these numbers is knowing thyself. Okay. Know thyself, my traders. Know thyself. 9, have a goal each Monday. Guys, you should never let a week start and not have a goal to work on that week. Every single week of your entire life should be geared toward coming just a little bit better than who you were last week. How many people in life do this? Most people allow their next week, their last week, to be duplicated this week. Their weeks blend. They're really living the same week over and over again. There's not new weeks in their lives. It's the same freaking boring, uninspiring, average, dull, normal week repeated over and over and over again. They don't strive for excellence. They don't strive to become elite. They don't strive or make an effort at becoming just a little bit better this week than I was last week. They don't do these things. But if you create the habit of having a goal, a trading goal every single Monday, you will ensure that you get just a little bit better every single week. Let's look at this. As I mentioned to you, this trader's goal should be to bring that down to $80. Now he's this week, starting Monday, I will not lose more than $80. I will not lose. I will make $80 my average loss per trade. So maybe the maximum loss per trade, let's say it's $110. If I bring this down to $110 max, it's possible that my average losing trade is like $80. Because remember, you're going to lose only one bar. Sometimes the one bar is going to be $40, $60, $70, like that. So this should be this trader's goal. Maybe the trader wants another week, wants to knock down this high volume. There's too much volume right there. Over trading. Maybe the next trader next week he wants to eliminate AMD and replace it with another stock. But let me just say this, traders. Listen to me carefully. Very important, very powerful. You can only work on one thing a week. You cannot take three things like I just named. Remove AMD, make your average loss go down to 80 and lower your volume. You can't do all three of those things in 1 week. Stop trying to accomplish everything in life in 1 week. You can't do it. You can only work on one thing a week. And if you got three things, then break it up over 3 weeks. I work on this one the first week. I work on this one the second week. Every week, just change, improve one little thing. I'll tell you a story. I'll tell you a story, guys. I can't remember where I read this, but I read this very young in my life. Remember, my mom was an assistant librarian, which means that I lived in the library because she wouldn't let me play out in the street a lot of times. So after school, she's like, Oliver, I better see you in this library at 3:30. You get out at 3 p.m., you better be here at 3:30. I had to be in the library doing my homework and then waiting for my mom to get off of work from the library. And what do you do in the library after you have nothing to do? You freaking read. I can't remember where I read this, but I did young. And I picked some book off the shelf and I began the reading. It was some health book or whatever. And in this book, something hit me. It said, I think it was like 10 or 11. It said that statistics have proven, I don't know if it's true, but the book said statistics have proven that every new word you add to your everyday vocabulary, every new word is worth an extra $2,500 in your life per year. And I was like, what? I said, wait a minute. Let me read this again. Every new word that you add to your everyday vocabulary will pay you $2,500 every single year of your life. What? Dude, Mom, I'm grabbing every single vocabulary book off the shelf. I want to take, there's 42 books here. I want to take these 42 books home, Mom. I just became a vocabulary fiend. Do you understand this? From a young age. I bought vocabulary books. I got vocabulary books off the shelves of my mom's library. I became obsessed. I used to read the dictionary. I used to read it. Okay, I'm reading all the words in the A's. Okay, now I'm reading all the words in the B's. I became obsessed with increasing my everyday use of key words. Some people say, well, Oliver, you're such a great communicator. That's where I think it came from. I wasn't taught, I didn't go to school for this. I just increased my vocabulary from a young age, which today I don't use very much because I have to dumb down my vocabulary to get across to a broad group of people who speak different languages. So I've got English going on here from me. I've got Portuguese and I've got Spanish. If I spoke at a certain vocabulary level, my translators would have a hard time sending that out to others. So I dumb it down a little bit, but I'm just telling you, I tell you this story because it was that got me in this view that I can literally improve my life every week of my life by just adding a word, a new word, $2,500 a year. Now I'm gonna add another word. That's another $2,500 a year to my life, and another word, another 2,500. I don't know how true that is, but I believed it at the time, and boy, did it pay off. So where am I going with this? You can improve your trading life forever, every single week of your life, by just making one little change, removing maybe your worst trading setup. Which setup is delivering you the biggest losses? Let's remove that this week. Boom. You overtraded last week. Let's bring the volume of your trading down to this number this week. Boom. Your maximum loss per trade was $180. Let's bring that down to $100. Let's shave $80 off of that. Boom. Do you understand what I'm saying? Your worst hour of the day is the second hour of the day. Let's eliminate the second hour of trading this week. Boom. You should never let a week go by without becoming just a little bit better. Every week gets assigned one goal. One goal. Powerful. Powerful. All right. Here we go. Let's go, guys. Let's go. Have a weekly goal. All right. Have a weekly goal. You get this. Step 10, don't trade with needed capital. Oh my God. Do you know how many people come to me and say, Oliver, look, my wife and I have saved up for our kids' college. We've got X number of dollars. I want to trade this. She's going to go to college in a year. I want to trade this to make it just a little bit bigger. I'm like, what's the matter with you? Like, dude, it takes time to do this correctly. You're going to freaking gamble your kid's future on your trading, and you can't even give me these 10 steps. You don't even know these 10 steps. No one's taught you. You have done. Like, come on, dude, don't trade with needed capital. The capital should be throwaway money. Should be money that if you lose, okay, it's not the end of the world. It doesn't feel great, but shoot, I'm not going to lose sleep. I'm not going to have to seek psychological help. I'm not going to be on the verge of committing suicide. Don't trade with needed capital. This game is hard enough without the added pressure that, shoot, I'm trading with my mortgage money. If I lose on this trade, I can't pay my mortgage tomorrow. Are you kidding me? You're guaranteed to be a bad trader with that kind of pressure on you. It's already emotional enough without that. Imagine putting that on top of you. This is crazy. Don't trade with needed capital. Now, guys, I tell you, I'm going to try to convince you that if you don't feel that you have the right amount of capital, come to me. I've got the capital. This is what I do, traders. I train you from the ground up. You get training every single day, and I fund you. You never have to risk your family's money. You never have to risk your own capital. And if you lose my money, I am going to just simply kill you. No, I'm teasing. No, if you lose my capital, I look at it as my fault, traders. If I can't get you to that place and you lose my capital, then it's my loss. It's my fault. This removes the financial pressure from you. This gives you all the freedom to be aggressive in the right way with these 10 steps in line and doing the right thing. And you can grow the amount of capital under my program. I tell traders that, listen, you can't really do this game appropriately unless you have really $50,000 in the stock market. I know what all the leverage markets want to tell you, but it's a guaranteed losing game. Overly leveraged markets are guaranteed winners for the house, winners for the casino. You know, you can only play in these leverage markets with little tiny money. They're poor. They're poor man's racetrack. They don't win. You can't show up to a gunfight with a knife. You can't show up to a professional game with a couple $100. It doesn't work that way. I don't know about other planets or other galaxies. I do know about this planet in this galaxy. You need money to make money. I don't care what anybody tells you. I don't care what anyone says. If you got less than $50,000, you're scraping the frickin' bottom of the barrel, and you're making the game harder. Now, 50,000 is not even enough, but it's a great place to start. And so I hand everyone a $50,000 trading account right off the bat. Now, first is in training, guys. First is in training. And what they have to do using 500 share max, we talked about that, losing no more than $200 a day. I want them splitting this into 3, giving them $66 loss per trade. Their goal over a 200 trade minimum or more. They got to show me 200 trades or more. But if they do 200 trades or more under this system and they can show me a $3,000 profit, they're done. They're finished. They graduate. And now this is real. See, first it's training, then it's real. This is a real $50,000. It's not your 50,000, it's my 50. But now just do it for real. Same parameters. Maximum share size 500, 500 shares, maximum loss per day 20, make it $66 per trade. Show me you can make $3,000 and I will give you 40% of all profits. Now remember, you have zero risk, zero downside. All the losses I take. So for instance, if your account's negative by a certain dollar amount and you quit while being negative, I eat the negative. You don't ever have to pay me back. All right? But so you have zero risk financially. And if you know basic business, if you have zero risk, you can't get the majority. I'm taking the risk. So you get 40% and never have to put a single penny into this operation. This is your business. You trade whenever you want to, from wherever you want to, how frequently you trade, whatever hours you want. There are no parameters. This is your business. All I'm doing is training you and dropping the money into the account. 40% of all gains you get. Now, once you pass this 3,000, your 50 becomes $100,000 account. Now you go to 1,000 shares. Now maximum loss per day 400. Now your goal is 6,000. You get 40%, I get 60%. Then you go to $250,000, then $500,000, then 1 million, then 2 million, and so forth and so on. You can grow yourself into this career the right way without ever putting a single penny in, and without ever the possibility of destroying your family, without ever the possibility of blowing up, without ever the possibility of ruining something for you. The worst thing you lose is your time. Powerful. I built this program so that I could bring professional trading, professional Wall Street trading to Main Street. You are Main Street. I am Main Street now. This is the right professional way to do things. Now, guys, here's the program. The Complete Trader Package is a very powerful package. It's really all you need. This package is made up of 2 things. It's made up of the Complete Trader Program, where you get everything you need. You get the complete strategy. You get live training every single day of your life. It never stops, forever. You get 2 study sessions with me a month. All right, this is with me directly. You have access to my funding and you get a 40% payout. This is the complete package. Now, there's only one other thing that's extra, and that is the live trading camp, which is where we focus on my specialty, guys. I built a reputation by being what I was called the 20-minute trader. They dubbed me the 20-minute trader. I made more money in the first 20 minutes of trading than most traders. Most traders didn't even start their trading day in the first 20 minutes of trading. It was something very unique all the way back in the 1980s, because it was a sacrilege to trade the open. But I started trading the open and I started putting up big numbers, and it shocked my firm and many firms on Wall Street as well. So much so that Wall Street wanted to send their traders to me to learn this style. That is how I started my own company, because so many traders, so many firms wanted to send me their traders. And I want every single one of my traders, the same way every single Wall Street trading firm wanted their traders to know my strategy. I want every single one of you to know my specialty. My specialty is the first 20 minutes of the trading day. And that's what we focus on here. This is everything, but this is the specialty. And let me just tell you this, guys. Let me tell you this. Specialists make the most money in the world. Generalists do well. I'm generally a good doctor, but a heart surgeon makes more. A general practitioner is good. You understand? But a thoracic specialist or surgeon does better. I want you to be a specialist. So the complete trader is that general competency. But that live trading camp is the specialty. You want to have the foundation under your belt. You want to be good overall. That's what the complete trader does. But the live trading camp takes you to the next level where you become the specialist. And so this is what the complete trading package is about, giving you that general power along with the specialty. And guys, there is nothing else. This is not something where, okay, now you come back for part 2, and now you come back for part 3 and 4 and 5. No, it's complete trader and live trading camp. Boom, done forever. You don't need anything else. There's nothing else. And guys, for the whole package, $3,500, you can lose this in 1 week. You can lose this in 20 trades. $3,500 for life, forever. That's it. Guys, you can make this back. You saw the trader. Look at this. $6,000 in 117 trades. Guys, this is nothing. And I tell traders to do this all the time, guys. Take $3,500. What everybody should do is to give themselves 5 years. You're going to dedicate 5 years. This doesn't mean you have to wait 5 years to be profitable. I'm talking about 5 years to mastery, 5 years to be able to do this completely for your life. Give yourself at a minimum 5 years. I would do more, but let's be conservative. Give yourself 5 years. Now, take this $3,500 and break it up over a 5-year period, guys. What is this? This is nothing. Who's calling me right now? Oh, no. Okay, this is nothing, guys. You know this. We're going to take 5 years, right? Take 12 months times 5. That's 60 months, right? Right? So you got 60 months, okay? Wait, 12 months times 5 is 60 months. Now, we're going to take $3,500 and we're going to divide that by 60. It's $58 a freaking month. Are you kidding me? That's not even a decent bottle of wine. That's not even a dinner for 2. Isn't your future, isn't doing this the coolest thing in the world the right way without ever having to put money into a trading account ever in your life? Isn't that worth $58 a freaking month? Let's break that down a day. Wait, divided by 30 days. It's $1.94. Guys, come on, $1.94. A freaking $1.94 a day. Some of you wouldn't even pick up $2 if you dropped it in a rush to your Uber to go see your girlfriend or boyfriend or to catch a freaking movie. You'd leave it there. It's $1.95 a day. This is how you have to look at the value. Is this worth more than $2 a day? Training every single day of your life, all day long. The whole market day training, hour after hour after hour. A funded account where you never have to put money in. What? Come on, traders. This is crazy. And on top of that, oh my God, now what is it? Are you kidding me? Until October 12th, guys, you got October 12th. I'm going to make this an absolute no-brainer. This is now less than $1 a day. $1,797 for everything. There's nothing else you need, guys. There's no part 2. There's no part 3. This is everything complete with the specialty. Then the rest is just 20 trades by 20 trades by 20 trades by 20 trades. Better every single week, better every single week, better every single week. More experienced every week, more experienced every week, but the right experience. Until, boom, you hit that point of no return. This is doing it professionally. This is doing it with structure. This is doing it the right way. This is doing it like Wall Street. This is doing it like an institution. This is not doing it like I'm in a chat room on Facebook with a bunch of other losers. And they're watching the news. No. Formal study sessions, breakout sessions, training sessions every single day of your life, reviews, keeping your finger on the pulse of statistics, being funded the right way with a structure, with a plan, with a master trade list. This is doing it the right way, which increases your odds of success. You can do these things a la carte if you want to, but I suggest go for the gusto. Do it the right way. It's less than $1 a day, the complete trading package, if you give yourself 5 years. And what, traders, do you ever truly, what in life is ever truly accomplished in less than 5 years? Like, think about it. If you look at anyone who's mastered something, if you look at anyone who's elite at something, it's like they dedicated more than 5 years to it. I'm not saying it's going to take 5 years to make money. I'm talking about elite status. I want you to be elite. Everything worthwhile takes time. And I'm not going to sit here and try to get more of you to do this by saying you'll be successful in a year or 6 months or 3 months. You're not going to hear that here. I'm sorry. But if you do this the right way, if you do it methodical with these 10 steps in line, with the right amount of capital, with training every single day, keeping your finger on the pulse of statistics and judging yourself every 20 trades by 20 trades, with overlooked by me and some of my top traders, wow, your odds of getting better every single week go up. You'll be in the elite class because most people are not doing these things. But check this out. As if that weren't enough, if you do this in the next 72 hours, now I like to reward people who are decisive. Oliver, this is enough for me. I'm hitting the freaking button. I'm buying the big elephant clearing bar. I don't need to think. I don't need to call the psychic hotline. I don't need to check with my wife. I don't need to I'm doing this. This is mine. I want this. Boom. 72 hours. I'm going to give you 60% of the profits. Whoo! Now, it's not that you get 40 and I get 60. You get 60 and I'm 40, and you don't even have to put a single penny into this operation. Wow. 17, same cost, but you get a higher payout. And on top of that, I'm going to give you access to my brand new Oliver Velez Academy, where there's tons and tons of educational material on demand. We sell this for $3,000. It's yours for free. Years of education and training in that academy. Wow. 2 extra things. 60% payout instead of 40, and access to my academy. Wow. Okay. And here's the ultimate, guys. I love this. You really want to show me? I don't have to check with my wife, Oliver. I don't have to check with anyone. I don't have to call the psychic hotline. I don't have to call my mom and ask her advice. I don't have to check around with other people. I know this. I want this. This is an opportunity that's come to me at the right time, at the right place. I'm ready. I'm going to hit the button in the next 30 minutes. Guys, it is 3:15 my time. It is 4:15 New York time, I think it is, right? 4:15 New York time, 3. You got 30 minutes. 30 minutes to hit the buy button. 30 minutes to do what you're supposed to do. 30 minutes to be a decisive trader. All right? This is what I want. I want to pull out the decisive ones because they have the best odds of going all the way. Anyone who hits that button in 30 minutes, anyone who signs up in the next 30 minutes, you're going to get the 60% payout. You're going to get access to Oliver Velez Academy for life, and I add to the academy all the time. I'm going to take you for a week into my mentorship program. I'm going to mentor you. I'm going to mentor you. You got a week. You're going to emerge instantly. In your first week, you're going to emerge. You're going to pass everybody in the first week. I'm taking you on semi-private mentorship. Boom, same cost, just that little extra but powerful piece. You got 30 minutes, guys. And let me just say this. Please, there are people right now that are planning to try to steal your money by pretending to be my team, by pretending to be my organization, by pretending to be a representative of mine. They're listening to this right now. They're already DMing you right now. They're already emailing you if they have your email right now. Please be careful. Every leader in this space has this problem. I am no exception. There are hundreds and hundreds of fake accounts that are going to pretend to be me or pretend to be my people. Listen to me carefully. I will never DM you. It's not me. I will never reach out to you and try to sell you something. It's not me. I will never ask you for money. I will never give you an instruction of where to send money. My team is only the people on this list. Take a snapshot. Take your phone out right now. Take a snapshot so that you make sure that you're dealing only with these people, or come back to this part in the presentation. But do it now. Take a screenshot. Take a snapshot. I want you safe. It's up to you to be careful, guys. This is the best I can do to protect you. All right, here it is. I'm showing you. These are the only people who have a right to communicate to me. So if you speak English, Spanish, or Portuguese, you know the people to reach out to. All right? You can do this. If you can count to 2, you can do this. The reason why most people can't is because they don't have structure. They don't have the right amount of capital. They don't have the right training and education, and they don't have the right reinforcement every single day of their lives. You have that here. I am a pioneer in this space, and I have the ability to take you all the way across the finish line. Let's do this together. Let's take this journey together, 20 trades by 20 trades. Let's do this the right way. Let's let next year come in, 2023, with several months under your belt and already exponentially a better trader. Let's do this. Let's prepare right now to make 2023 one of the best trading years of your life. We can do this. Let's go. Boom. You guys are amazing. I love you. Thank you once again, traders. I know that for so many of you, you could be doing something else, but you're here, and I appreciate that. I always tell you that I vow to myself, right? I vow to myself. Let me just make sure everything's okay. All right, let me make sure everything's okay. Everything's okay? All right. Okay. I make sure every single day, guys, that every single time I get an opportunity to speak on a podium or in a mic or in front of you, I try my best to make sure that I deliver something of value, something of lasting value, something that you can utilize, something that you can take away, and something that has the potential of just changing your life a little bit better when it comes to your trading life, that is. I hope I've done that here today. Again, please repeat this presentation multiple times if you can. getting experience in between each time, make sure that you put these 10 steps to work starting right now. And traders, I do know that there's a percentage of you right now here that this is perfect for. This is your opportunity. This is your time to do the right thing. And the cost is right. Everything of value has a cost. So there is a cost, but the cost is so small compared to the reward. I implore you to do this if your desire is to ever become elite at this game. Thank you so very much for attending. Please, guys, if you have not subscribed to the channel, please do so. Subscribe, hit the bell in the upper right-hand corner. Make sure you turn all notifications. Make sure you turn all notifications on so that you miss absolutely nothing. And make sure you like this video, guys. It helps the algorithm, and therefore it helps the video be able to extend its reach to more people. Let's bring more people into this the right way. All right, there's power in numbers. I love you so very much. Thank you once again. Thank you for attending my last master class of the year. Ciao for now. Boom, boom, boom. Another one, another one. Ciao, guys.